touched leg. So we are done with the method of valuation of goodwill, that is average profit, super profit and capitalization method. Well, today we are going to discuss the accounting treatment of goodwill. So whenever a new partner is admitted with a partnership firm, he has to bring two main things, two important things, that is capital and goodwill, or premium for goodwill. So they all are one and same. Now my question is, why a new partner has to bring an agreed amount of capital, either in cash or kind? And the reason is to get his share of assets in the firm. Right to share the assets. Now my second question is, why new partner has to bring premium or goodwill? The reason is to get his share in the future profit of the firm. Right to share future profit. Okay, now tell me, from where a new partner gets his share of profit? Obviously, he gets his share of profit from old or existing partners. They sacrifice a part of his share in favor of, their share in favor of new partner. So therefore, a new partner has to bring additional amount as premium or goodwill to compensate the old partner for the sacrifice that they have made to accommodate new partners. Okay, now for the accounting treatment of goodwill, we have three main steps, three important steps. We have three steps for accounting treatment of goodwill. So the first step is to find new partners' share of goodwill. Normally, we don't find new partnership of goodwill directly. We have to find it out. The second step is to calculate sacrificing ratio. Sacrificing ratio. So what is sacrificing ratio? Sacrificing ratio is the ratio in which old partners sacrifice a part of their share in favor of new partner. And the formula of sacrificing ratio is equal to old ratio minus new ratio. As we have already discussed the accounting treatment of new profit sharing ratio, knowing new ratio is equal to old ratio minus sacrificing ratio, which means we derive sacrificing ratio from this equation. How? If we transpose sacrificing ratio to left hand side and new ratio to right hand side, we will get the formula of sacrificing ratio. Now, why we calculate sacrificing ratio? Since goodwill brought in by new partner should be transferred to sacrificing partner in their sacrificing ratio. Therefore, we have to calculate sacrificing ratio. Is that clear for you? Okay. Now the third step is to pass necessary journal entries regarding goodwill. Okay? Normally, we have to pass journal entry first regarding goodwill. In order to pass journal entry regarding goodwill, we have to follow these steps. Is that clear for you? Okay, now if we further discuss the first topic, that is, how are we going to find new partners share goodwill? Okay, yes, if we further discuss the first step, that is, how are we going to find new partner or share goodwill? For that, we will be given any one of these situations which enable us to find a new partners share goodwill. So the first situation is when new partners share of goodwill is given directly. Suppose say C as a new partner brings rupees 10,000 as premium for goodwill. So, from the given information, we don't have to find new partners share goodwill, since it is given here. New partners share profit is new partners share goodwill is given, so we don't have to find it out. So it is easy for us if it is given. I mean, new partners share of goodwill is given. Okay. Now the second situation is when firm's goodwill is given. Suppose say goodwill of firm is valued at rupees 1 lakh, and C has to bring the necessary amount of goodwill, and they admitted C as a new partner for 1/5 share. So in this question, new partners share of goodwill is not given. So here what we have to do is we have to find new partners share of goodwill. So how are we going to find new partners share of goodwill? Obviously from firm's goodwill. We are going to find new partners share of goodwill from firm's goodwill. Normally we calculate new partners share of goodwill on the basis of firm's goodwill. So C's share of goodwill is equal to, what is firm's goodwill? 1 lakh. 1 lakh multiplied by what is C's share of profit? 1 by 5. So C's share of goodwill is 20,000, which means C has to bring this 20,000 as his share of goodwill. Okay, now the third situation is if both the new partners share of goodwill and firm's goodwill are not given. Apply one of the three methods of valuation of goodwill. Suppose say the profits for the past 3 years are 2015 rupees 20,000, 2016 rupees 30,000, 2017 rupees 40,000. Then assume that goodwill is calculated at 4 years purchase and they appointed C as a new partner for 1/4 share in the future profit. Okay, now from this information, neither new partner's share of goodwill nor firm's goodwill are given. I mean, both the new partner's share of goodwill and firm's goodwill are not given. So how are we going to find firm's goodwill? By using one of the methods of valuation of goodwill. So here we are going to find firm goodwill by using average profit methods. So what is formula of firm's goodwill? Firm's goodwill, by using average profit method, firm's goodwill is equal to average profit multiplied by number of years purchase. Okay, so what is average profit of past 3 years? Okay, 20,000, 30,000, and the last one is 40,000, and it should be divided by 3 since we have 3 years profit, and it should be multiplied by number of years purchase. So what is number of year purchase? So we have assumed that number of year purchase is 4. It should be multiplied by 4. So how much we got here? 90,000 divided by 3 multiplied by 4, which is 30,000 multiplied by 4 is equal to 1,20,000. So 1,20,000 is firm's goodwill. Once we get the value of firm's goodwill, we can find new partner's share of goodwill. How? From firm's goodwill. Normally we calculate new partner's share of goodwill on the basis of firm's goodwill. So C's share of goodwill is equal to, what is firm's goodwill? 1,20,000. And what is C's share of profit? 1/4. So it should be multiplied by 1/4. So how much we got? So 30,000 is C's share of goodwill, which means C has to bring rupees 30,000 as his share of goodwill. Okay. Now we will discuss fourth situation. Okay, now the fourth and the final situation is hidden goodwill. Suppose say X and Y are partners with the capital of rupees 2 lakh and 1 lakh respectively. So they admitted C as a new partner for 1/5 share, and C will bring rupees 1 lakh as capital. So now, in this information, in this question, no information is given, nothing is given regarding firm's goodwill. Is that clear for you? Okay. Now we have to find firm's goodwill by using 3 steps. The first step is to find total capital of new firm. Total capital of new firm is equal to new partners capital multiplied by reciprocal of his share. Now what is new partners capital? New partners capital is rupees 1 lakh. Now what is new partners? C's share of profit 1/5. So what is reciprocal of 1/5? It will be 5 by 1. So how much we get? 5 lakh. So 5 lakh is total capital of new firm. Now why we multiply new partners capital by reciprocal of his share? I'll tell you the reason. For 1/5, C has brought how much? C has brought 1 lakh as capital. Let's assume 1 as firm's share. Now what we have to do is, we have to find total capital of new firm on the basis of new partners capital. So we don't know the total capital of new firm. So how are we going to find? By multiplying X by 1/5 and 1 by 100. So here how much we got? 1/5 X is equal to 1 lakh. So X is equal to 1 lakh multiplied by 5. So X is equal to how much? 5 lakh. This is how we get total capital of new firm. So we don't have to follow this procedure. It takes time. We can straight away use this formula. Okay? Now the second step is total capital employed. So total capital employed means total capital invested by all the partners, including new partners. So what is capital of X and Y? 2 lakh plus 1 lakh. And what is capital of new partner? Yeah, 1 lakh plus 1 lakh. In total, how much we got? 4 lakh. So 4 lakh is total capital of new firm. Now we can find firm's goodwill. The third step. Firm's goodwill is equal to total capital of new firm minus total capital employed. What is total capital of new firm? Total capital of new firm is 5 lakh. Minus what is total capital employed? Total capital employed is 4 lakh. If we deduct 4 lakh from 5 lakh, how much will we get? 1 lakh. So 1 lakh is goodwill of firm. Now we can find new partner, I mean C's share of goodwill. So how are we going to find C's share of goodwill? C's share of goodwill is equal to 1 lakh multiplied by 1 by 5, which is 20,000, which means C has to bring rupees 20,000 as his share of goodwill. Is that clear for you? Now we are done with all the 4 situations which enable us to find new partner's share of goodwill. Okay, now let us understand what journal entries are passed regarding goodwill and capital at the time of admission of partner. Like I said before, whenever a new partner is admitted into the partnership firm, he has to bring both capital and goodwill. But our main focus is the accounting treatment of goodwill. For that, we have 5 cases for the accounting treatment of goodwill. 5 cases relating to accounting treatment of goodwill. Okay, now we are going to discuss all the 5 cases in details one by one. Now, the first case is when goodwill brought in by new partner in cash and in kind. In kind means assets other than cash, such as land, building, furniture, etc. First, we are going to discuss when goodwill brought in by new partner in cash. Okay. If goodwill brought in by a new partner in cash, then the journal entry will be cash account dr to new partners capital account to premium for goodwill account. And the second journal entry will be premium for goodwill account dr to sacrificing partners capital account. Let's assume that new partner has brought rupees 1 lakh as his capital and rupees 20,000 as his share of goodwill. In total, how much he has brought? he has brought, new partner has brought 1,20,000 in cash towards capital and premium. Now why cash account is debited here? Because cash is coming to the business since new partner has brought both capital and goodwill in cash, which means cash increases here. Since cash is an asset, if asset increases, we have to debit the asset account. So therefore, cash account is debited here. Now, new partner's capital account is credited here because new partner has brought capital in the business. Thereby, his capital will be increased. If capital increases, it should be credited. Now, why premium for goodwill account is credited here? Here, the goodwill which is brought in by new partner does not belong to firm. It is to be transferred to sacrificing partner in their sacrificing ratio, which means premium amount is payable to sacrificing partner. Therefore, it should be treated as liability. If liability increase, then premium for goodwill account should be credited. Is that clear for you? Now what happens is, the goodwill or premium brought in by new partner should be transferred to whom? Sacrificing partner. If premium is transferred to sacrificing partner, then liability will be decreased. If liability decrease, it should be debited. That is why premium for goodwill account is debited here. So what is the amount? 20,000. So here we have to write something. So we have to write 20,000. So this 20,000 should be transferred to sacrificing partner in their sacrificing ratio. Let's assume that sacrificing ratio of old partner is 3:2. So this 20,000 should be transferred to sacrificing partner. Let's suppose say A and B are sacrificing partner. What is sacrificing ratio? 3:2. So 20,000 should be transferred to A and B in the ratio of 3:2. 3 by 5, which means how much? 12,000. And B is 20,000 multiplied 2 by 5. So 8,000. Is that clear for you? Now why sacrificing partner capital account is credited here? Because premium amount is transferred to sacrificing partner's capital. Thereby their capital will be increased. If their capital increase, then it should be credited. Is that clear for you? Okay. Now we will do second part of case 1, which is when goodwill brought in by new partner in kind. If goodwill brought in by new partner in kind, then the journal entry will remain same. We have to pass same journal entry. Nothing will change except we have to write here assets instead of cash. Because new partner has brought assets towards his capital and goodwill. Is that clear for you? Now we are done with case number 1. Now the second case is when goodwill brought in by new partner in cash and the same is withdrawn fully or partly. If goodwill brought in by new partner in cash and the same is withdrawn fully or partly, then the journal entry will be cash account. We have to write same journal entry. We have to pass same journal entry, cash account GR to new partners capital account to premium for goodwill. So premium amount should be transferred to whom? Sacrificing partner. Premium for Goodwill. Account should be debited since premium is transferred to sacrificing partner. To sacrificing partners capital account. So here we have to pass one more entry regarding the premium withdrawn by sacrificing partner. The third journal entry is sacrificing partners capital account DR to cash or bank account. Let us assume that new partner has brought rupees 1 lakh as capital and rupees 20,000 as his share of goodwill. In total, how much he has brought? He has brought 1 lakh 20,000. So this 20,000 should be transferred to whom? Sacrificing partner. So here we have to write sacrificing partner, as we have assumed sacrificing ratio as 3:2. If 20,000 is transferred to sacrificing partner A and B, so how much A will get? 20,000 multiplied by 3/5, how much A will get? 12,000. And how much B will get? We will get how much? 2/5 measurements. We will get 8,000. Now what happened is, the premium brought in by new partner is transferred to whom? Sacrificing partner. Now they are withdrawing the premium amount. If they have withdrawn the premium amount fully, then the sacrificing partner's capital will be debited. Since they have withdrawn premium amount for their personal use, so their capital will decrease. If their capital decrease, then their capital should be debited. Sacrificing partner capital should be debited. So, what is premium amount? So here we have to write 12,000 and 8,000. Why so? Because they have, sacrificing partner have withdrawn premium amount fully. So in total, how much they have withdrawn? 20,000. Since cash is going out of business, we have to credit cash account. Okay? If premium amount is withdrawn partly, suppose say 50% of the premium is withdrawn by sacrificing partner. So what is 50% of 12,000? So 50% 12% will be how much? 6,000. What is 50% of 8,000? You will get how much? 4,000. In total, how much we got? 10,000. This is how we pass journal entry regarding goodwill brought in by new partner in cash, and the same is withdrawn by sacrificing partner. Is that clear for you? Whenever a new partner brings goodwill, then the goodwill should be transferred to whom? Sacrificing partner in their sacrificing ratio. Is that clear for you? Since goodwill brought in by new partner has withdrawn by sacrificing partner for their personal use, therefore sacrificing partner's capital will be decreased. If the capital decrease, their capital account should be, we should debit the sacrificing partner's capital account. Since cash is going out of the firm, so cash account should be credited. Is that clear for you? Okay. Now we are going to do case number 3. When a portion of goodwill is brought, when portion of goodwill is brought in by a new partner. Suppose say C as a new partner, has to bring rupees 20,000. His new partner has to bring rupees 20,000 as his share of goodwill, but he has brought rupees 15,000 only. Okay, if a portion of goodwill is brought in by a new partner, then the journal entry will be cash account. There again, we have to pass same entry to new partners capital account, to premium for goodwill account. And the second journal entry is premium for goodwill account DR new partners current or capital account DR to sacrificing partners capital account. Let's assume that new partner has brought rupees 1 lakh as his capital. Now, the goodwill which is to be brought in by a new partner is rupees 20,000, but he has brought only 15,000. So we can't write 20,000 here, since he has brought only how much? 15,000. So here we have to write 15,000. In total, how much he has brought? He has brought rupees 1,15,000 towards capital and goodwill in cash. So normally premium should be transferred to whom? Sacrificing partner. What is the premium amount? 15,000. Now here, goodwill which is to be brought in by new partner is 20,000, but he has brought 15,000. Now what about the remaining amount, which is 5,000? The remaining amount should be adjusted from new partner's current account or capital account, which means if the remaining 5,000 is paid from his current account or capital account, then new partner's current or capital account will be decreased. If current or capital account decrease, then it should be debited. That is why, so here we have to write 5,000. Whether the new partner is able to bring his share of goodwill or not, the whole amount of goodwill, that is 20,000, should be transferred to a sacrificing partner. Right now, the remaining amount of 5,000 is adjusted from where? Adjusted from new partner's current account or capital account. Is that clear for you? If the remaining amount of 5,000 is paid from new partner's current account or capital account, then their capital will be decreased. If capital decreases, then we should debit the partner's current or capital account. So this premium amount, which is 20,000, should be transferred to whom? Sacrificing partner. Suppose say A and B are sacrificing partner, and sacrificing ratio is, let's say, 2:3:2. So 20,000 should be transferred to A and B in the ratio 3:2, which is B how much? 20,000, which is 2/5. How much we got? 12,000, again 8,000. Is that clear for you? Okay, now we are going to do our case number 4.